Good morning this Monday, the 15th of April. I'm Grady Wolfe, market analyst with Bell Direct. Rising geopolitical tensions and inflation concerns were the drivers of Wall Street's negative close on Friday, with the Dow Jones suffering its worst session since January. The launch of attacks on Iran from Israel fueled oil prices to surge over the weekend, paired with fresh US imports data adding fuel to investors' concerns of rising inflation pushing back the outlook for rate cuts in the world's largest economy. The Dow Jones fell 1.24% on Friday and 2.37% for the week. The S&P 500 lost 1.46% on Friday and 1.56% for the week. And the tech-heavy Nasdaq lost 1.62% on Friday and 0.45% for the week. First quarter results in the US have started being released, with Wells Fargo sliding 0.4% on Q1 results on Friday, while Citigroup declined 1.7% despite posting a beat in revenue. JPMorgan Chase fell 6% on Friday after the banking giant posted first quarter results, including outlook for net interest income to likely come in slightly short of Wall Street expectations for 2024. Over in Europe, markets closed mixed on Friday as investors digested key economic data and assessed the latest inflation reading out of the US. The Stoxx 600 rose 0.06%, led by mining stocks rising 2.4% on Friday. Germany's DAX fell 0.13%, the French CAC fell 0.16%, and in the UK, the FTSE 100 rallied 0.91%. British economic output increased by 0.1% month on month in February, which was in line with expectation and provides a further sign of slight improvement in economic stability following sluggish growth over recent months. The European Central Bank also announced the holding of interest rates for a fifth consecutive meeting on Thursday, but gave its clearest signal yet that rate cuts are on the horizon in the near future. In Asia on Friday, markets closed mixed in the region as economic data and key inflation readings sparked mixed investor reactions. Hong Kong's Hang Seng lost 2% and China's CSI index fell 0.81% following China's exports falling more than expected in the month of March, coming in at a decline of 7.5% compared to the 2.3% fall economists were expecting. Locally on Friday, the ASX 200 closed the final trading session of the week lower as investors continue to question rate cut hopes out of the RBA and the Fed. The ASX 200 fell 0.3% on Friday but rose 0.3% for the week. Consumer staples and consumer discretionary stocks weighed on the market on Friday, but some of the heavy losses were offset by strong gains for utilities and tech stocks. Star Entertainment Group fell 7.3% on Friday after reporting a significant decline in revenues from its gaming rooms, while Cettire dropped almost 7% despite preliminary sales figures for Q3 coming in strong. Ahead of the local trading session here in Australia to start the new trading week, the SPY futures are expecting the ASX to open Monday's session down 0.64%, tracking Wall Street's losses on Friday. On the commodities front this morning, oil is trading 0.36% lower at $85.36 a barrel. Gold is up 0.7% at $2,359 an ounce, and iron ore is up 1.28% at $106.5 a tonne. One Aussie dollar is buying 64.76 US cents, 99.22 Japanese yen, 52.29 British pence, and 1 New Zealand dollar and 9 cents. And now let's dive into some trading ideas for your consideration this Monday. Bell Potter has increased the rating on Cettire from a hold to a buy, but have reduced the 12-month price target on the online fashion retailer from $4.50 to $4 per share, following the release of the Q3 trading update, including sales revenue of $168 million, which was 88% higher than the prior corresponding period and was a 14% beat on Bell Potter expectations. However, adjusted EBITDA margins of 3% were a miss of Bell Potter's expectations. And Trading Central has identified a bullish signal on Bega Cheese following the formation of a pattern over a period of 33 days, which is roughly the same amount of time the share price may rise from the close of $4.16 to the range of $4.65 to $4.75, according to standard principles of technical analysis. And that's all we have time for this morning. Have a wonderful Monday, and as always, happy investing.